Okay. So Puru has joined. Shrey is there. Pratik, Udit, Shiva.
Yes, sir.
Bharat is there. Pratik, Puru, Shiva. Okay. Fine. So we are going to start now. Okay. So fine. So I'm just going to put my PPT. So please listen to the today's lecture carefully because we are going to do very important thing. Okay. Okay. Can you hear me now? All of you?
Yes, sir.
Udit, your voice is not coming so clear.
Sir, am I
Just
audible
hold on.
now?
I'll just check my microphone. Okay. Now, Udit, can you speak?
Sir, am I audible now?
Yeah, now you're audible. Actually, I had it was turned it on a very low volume, so that's why I done it. Okay.
Okay.
Just a second. ये चला गया. Give me 1 minute, okay? I'm just starting the recording, okay? Okay. Now everything is set. Okay. Can you hear me now, everyone? Nikita, have you joined?
Yes, sir.
Okay, Bharat, leave you. Okay. So, what we are doing is derivatives. Fine. And, this is a little bit complex instruments, as I said earlier, but hope you are following everything. But the knowledge of derivatives is very, very important for all of us. Okay. And I can tell you that if you gain a very good knowledge and grip over, on the financial markets, particularly the derivatives, it will help you a lot in your life. You know, I can say that I'm making almost like 3 to 4 lakh rupees per month in form of various investments and using derivatives. Okay, so if you have a great knowledge and understanding by experience, you can replicate that, and it helps you basically to become financially very capable so that you can do whatever in your life. So that's why this subject is so important, and I always give importance to this subject because people sometimes think that it is a subject which is little complex in nature, but it will help you in improving your financial health. So now, if anybody doesn't want to, then you can just not pay any attention, but it is going to help you out. Okay, fine. So let's start. Okay, the lecture. So basically, I told you that that derivatives are basically they were cash settled earlier, particularly the future and options. But now the physical settlement is taking place for some of the derivatives, and you can always avoid a physical settlement. Okay, fine, and you can still settle your all your trades in cash. So let's understand what is physical settlement, and it will once you understand, you can always if you want you would be able to avoid this physical settlement rather than take your profits in cash. So that is always a better way of doing it. Okay, so let's understand. And Nikita, can you read?
Yes, sir. Overview. Until recent times, trading in equity futures and options was cash settled in India. What this means is that upon expiry of the contract, buyers or sellers had to settle their position in cash without having to take delivery of the underlying security.
So basically, the things were very good and until certain years back when, there was only a cash settlement which was happening. Okay, so you don't have to give any delivery or take delivery of, the stocks in which you have taken the trade. So it was basically, if you made profit, you will get money. If you lost money, you have to pay that money to the exchange, which will be remitted to the person who has made money. So, but now the things have become a little bit difficult, but you can still manage and avoid delivery. Okay, easily you can avoid delivery.
On April 11, 2018, SEBI released a circular making physical delivery of stocks for all stock F&O contracts mandatory in a phased manner.
So basically, on 11th of April, which was the day in 2018, where the SEBI, came with a circular making, physical delivery compulsory for all stocks which are in future and options segment. Okay, if you are entering into a contract, if you don't close your contract before the expiry, then this rule will come. As we'll go and understand, more in detail through an example.
The aim was to curb excessive speculation, which would result in too much volatility in individual stocks.
Basically, because earlier system of cash settlement was causing, a lot of volatility around the close on the expiry day, on Thursday, on every last Thursday of the month, because the expiry takes place, and because of that, there was a lot of volatility on that particular day, and which was not considered very good. That such a volatility is experienced on the last couple of days before the expiry. So basically, to avoid that, the SEBI has come with this circular, because volatility can cause a lot of problems to the investors, particularly the long-term investors who have to exit on that particular day for taking some money out. So they will find the stock prices are moving quite a here and there, so which can affect their profitability. And there can be many other reasons. You can always research on that why the SEBI has introduced this circular. And but the main net it remains is that it is the excessive speculation which was taking place only on the last couple of days on the expiry day particularly. So so that's the reason why the SEBI has come with this circular.
How are positions settled? On expiry, various F&O contracts are settled in the following manner.
So this is the most important thing, and please listen very carefully, and it will help you out basically to understand the derivatives more properly, particularly when the physical delivery has been introduced. So on the expiry, various future and options contracts are settled in the following manner, and I'm going to explain through an example, which will clarify everything in much detail. Okay, which will be on Excel sheet, which will be coming just after I finish this presentation.
Take delivery. Stocks are delivered to your demat account, long futures.
So that means, if you are long on futures, that means you have taken a long, you are bullish on a stock and you have taken a long contract. That means you have bought a stock in the futures and options market and it remains, till the expiry, you have not closed this position, then you have to take the delivery. That means you have taken a long futures means you have bought the stock. So you haven't closed your position, you will get the delivery of the stock on which you have taken a long position. Okay.
Give delivery. You are required to deliver the stocks to the exchange, short futures.
So that means if you have taken a short position, that means you have sold a stock, particular stock like Reliance or Tata Motors or any stock, and you haven't closed the position. Okay. So you are required to give the delivery. That means you have sold. Okay. So now you have to give the delivery to the buyer and you will get the money from the buyer, full money of that particular stock. In case of long futures, you have to pay the money because you will be given the delivery. Okay. So since you will get the stock, like if you have taken a 250 lot size of a stock like Reliance, so you will get entire 250 stocks in your demat account, and whatever is the value, you have to pay that amount to the person who has taken the short position. And short position will give you the delivery of Reliance on that day if the positions are open on that day. Okay. Okay.
Margins. When you are trading in the F&O segment for futures, you will require to maintain only the margin amount in your account. However, this changes with the physical settlement mechanism, where you are required to bring in 100% of the contract value to take delivery of the contract, or bring in stocks to give delivery, depending on the direction of your trade.
Now, if you haven't closed the position, so the physical settlement will happen. So either you will receive stocks for which you have to pay the money, or you will be delivering stocks to the other guy and you will getting the full 100% money of the value of the stocks. So that is a change which has happened. So you have to be very careful that you don't leave anything uh, on expiry. You have to square up and go for a cash settlement much before the expiry happens so that you will not be in such kind of a situation.
Brokers introduce additional margins when such positions get closer to expiry.
So since, because the exchange has to make sure that there is no default happening for those, people who haven't closed their positions. So they have to either, bring in money or they have to give money for the delivery. So the brokers, they have introduced additional margins. So that means, you will get a heavy demand on the close of just before the delivery, before the expiry, if you haven't closed the positions. So this will put you under a stress of, either the money or to give the delivery of the stock, which you don't have, or you will get the stock which you don't want. You want only the profits. So in that case, to avoid such situations and avoid any kind of a default, the brokers are going to ask more money from you, okay, to make sure that at the end of the settlement, the brokers are having enough money to take care that there is no default, okay. Okay.
In the case of physical settlement of futures, the settlement would be at the future's final settlement price. That is, the closing price of the underlying stock in the capital market segment on the expiry day.
Now this is very important, okay, and I'll just immediately after this slide I'll go to the an example where you will understand, okay, and rest of the slides we'll cover after we have understood that example. So in case of physical settlement of futures, the settlement would be at the futures final price, okay, and that is the expiry day. So on the expiry day, the price which is prevailing in the capital segment of the market will be applied for calculating your for calculating the closing price of the underlying stock. Okay, on that price, everything will depend upon how much profit you have made or how much money you have lost. Okay, so let's move on to the example where you will have a much better view about what I'm talking about. So there's a file called futures. I'm just opening that. So I would say that everybody should clearly listen, and we just did something early last time. So let's complete that. Okay, so this is very interesting, and you will find all the explanations what I've been talking about will come through. Okay, so let's say so you are it's on 4th of February now. Of course, it is 9th, but we started our understanding of this futures example on 4th of February. So on 4th of February, what happened was Nikita took a long position on Reliance. Okay, that means Reliance 24th February 22. So this is the last Thursday. That means this trade will get expired on the last Thursday, which is 24th February 2022. So what she has done, she had gone long on 250 Reliance, and each Reliance price in the futures market was 2330. Now the price in futures and the capital segment price are totally different. It can be a difference of 10 or 15 or 20, 30 depending upon how the markets are placed. So as I told you, the future price is equal to the cash price plus the interest. Okay, fine. So that's why the future price is always more, because you are buying the stock in future and not now. So the future price generally, theoretically, should be higher than the cash segment price. Okay, so the lot size is 250. Fine. Now Nikita has taken a long, and suppose on the other side of the table it's Bharat who has taken a short position. Okay. Now when you take a position in the market, you don't know. You only know yourself. Okay, but you don't know other side of the person who he is. So I'm just for identification purposes, I'm assuming Bharat has taken a short position and Nikita has taken a long position. And then this will be a cumulative gain or loss for Nikita. Okay. And this will be the cumulative gain and loss for Bharat. Okay. And then I'll introduce Udit later on because he's going to take a position later on. Okay. At the moment, Nikita and Bharat have taken position. So what position Bharat has taken? Long or short?
Short, sir.
And what position Nikita has taken?
Long.
And
Long.
in which stock they have taken?
Reliance.
Reliance.
Reliance. Okay. And when the Reliance, this is for the near month, which is the February month, which is running into. Now the contracts are happening in the month of February. What other two contract period open? February, March, and April. But she has taken a long on the February trade. Okay. She said that Reliance is going to go up. She's bullish. Nikita is bullish. And what is Bharat? He is bullish or bearish?
Bearish.
Because he is bearish, he thinks that he can take a short position, make money. Okay, and both have done their technical analysis and both have opposite views on Reliance. Okay, now what happens on 7th of February? Reliance goes to 2339. Who makes money, Nikita or Bharat, on that particular day?
Nikita.
And Nikita makes 9 rupees multiplied by 250. Okay, if you look at the formula, I'll just show you the formulas also here. The formula is basically Nikita has made a profit between 2339 minus 2330 into 250. So this is 2000. So Bharat is going to lose. So what will happen? So there is something called mark to market settlement. So Bharat has to pay 2250. Okay, and Nikita will get 2250 in her account. Okay, fine. And cumulatively, as of today, Nikita is gaining 2250 and Bharat is making a loss of 2250. Okay. Now, let's say on the next day, market is open and the price of the Reliance goes to 2290. Now, what has happened to Reliance price? Come down or gone up?
So it has come down.
Who has made money for the day? Nikita, Bharat.
Bharat.
But
Because Bharat has taken a short position. Okay, so cumulative now in cumulative form, who is making who is losing money and how much? Nikita is losing how much till today for the first 2 days trade. Nikita, how much
10,000.
money? You are making 10,000 loss, and
Yes,
Bharat is
sir.
sitting in a positive position. Okay. Now this is mark to market settlement, so that means Nikita has to give 12,250 to Bharat, and Bharat will get to 12,250 from Nikita. Okay. Now let's say 9th of February, so it is 2,300. What happens basically? Who makes a gain today?
Nikita.
So she gets 2,500 and Bharat has to pay 2,000. So on cumulative position, Nikita is still under loss and Bharat is making a gain. Okay, because Bharat thought that the stock he's taken a short position. So the price have come down by 30 rupees from the start day. So he is making a gain. Okay, on 10th of February, what happens? The stock price goes up. Who makes money on that particular day? Nikita or Bharat?
And Nikita.
So what is the net position now? Who is sitting on profit, Bharat or Nikita?
Nikita.
Nikita.
So on net basis, because she started at 2,330 and today it is 2,340, so it's gone up by 10 rupees. Okay, so 10 multiplied by 2,250 is 2,500, which is coming reflecting the cumulative position. So the cumulative position is what? How it is calculated? Puru?
Yes,
How
sir.
this
Sir, can you repeat
2000?
the question?
I am asking how this 2,500 positive figure is coming to Nikita on a cumulative basis.
Sir,
What is it?
by adding all the previous amounts before.
No, that is okay. That is okay. But if you have to just look at, from a different angle, what is the price today? Puru?
Sir, 2340. 2340 into 250.
No, 2340. Okay. And what was the price at which Nikita took a long position?
Sir, 2330.
So
So,
how much?
so 250
Yeah.
into 10. 250 into 10.
So that is 2000. I mean, of course, it is cumulatively it is coming, but you can even cross check that she is gaining 10 rupees, okay, on her net position. So she is making still 2,500. Okay, fine. So what happens on 11th of February? Udit, what happens on 11th of February? Or Bharat, what happens on
the
11th of?
so it rose up, sir.
It rose up. So So what is the position? What is the cumulative loss of Bharat? Is Bharat making a loss or making a profit on that day, particular day?
Sir, Bharat is making loss and Nikita is making profit.
And how this figure of 5,500, if you have to calculate, how you are going to calculate that? Udit?
Sir,
Yes.
by looking at the first initial price, then the price on 11th Feb into lot size.
या हाँ समीर मेरा क्लास चल रही है अभी ना लॉकिंग की तो थोड़ी देर में बात करता हूँ ठीक है अब खत्म होगी ना 1 बजे खत्म होगी ओके सो दिस इज 235 हाँ यू आर सेइंग 2352 minus 2330 so who is
Yes, sir.
making so Nikita has taken a long position so Nikita is making a gain okay fine now tell me Bharat what happens on 14th of February
It's a rise, sir.
it has gone up okay so now on that basis it has gone up so who would be sitting on profit on a cumulative basis and who will be sitting on a loss on that day tell me how it has been calculated
Nikita is sitting on profit and Bharat is sitting on loss.
and how do we compute that by just looking at the numbers don't go to the formulas just look at the numbers apply your mind how this profit or loss would have been calculated
So the difference between future price of 4th Feb and 14th Feb.
yeah that is speak out the numbers what is the difference between 14th Feb and 4th Feb Bharat
30,
Nikita
sir.
30 multiplied by 250 so that is 7,500 okay so on 15th of February what happens the price goes up again so Nikita is gaining 2,500 so on a net level Bharat is losing and Nikita is gaining okay then on 17th of February so the stock price goes up further and Nikita makes a big jump on her profits so it goes up by 40,000 and Bharat is losing 40,000 okay so cumulatively Nikita is sitting on a huge profit of 57,500 and Bharat is losing a lot of money now on 18th of February okay what happens it goes up to 2,600 so Nikita thinks that its time has come she should exit and make profits so she's sitting on a profit of how much Nikita how much profit you are making till 18th just one day before the expiry how much is the profit you are making
67,500.
and how much Bharat is losing on that day
Same 67,500.
okay now so it is 19th of February when Nikita thought that or 18th evening whatever so 19th morning so Nikita thought let me just come out of the trade so what Nikita has to do for basically what Nikita has to do now to book her profits what she's going to do she is going to take a now earlier which position she has taken long or short Nikita
Long position.
now, what position are you going to take in the market
Short.
so that you short position? Now she's going to, take a fresh position in Reliance, and she's going to sell Reliance 24th February, okay, at 2,600 with 250 lot size, okay, fine, and this will happen so that now Nikita position is getting closed. She is basically coming out of the trade, okay. So if you look at Nikita when she started the trade, she paid a span margin, okay, on that particular day and exposure margin, which is around 1,52,600, which is 26% of the face value of the share, okay, fine. So if you have to just calculate this, this is basically 1,52,000 is the total margin. So we saw this is not linked to the formulas. So we had gone to the exchange and found what was the margin, and the total money which she has given was 1,52,620. Now, if you have to calculate how much percentage it is, then we can use the formulas to know that. Okay, so the formula is basically the Reliance price into the lot size. Okay, so this is the total value of the stock. Okay, fine. So and then we take the total less 1,52,000 and divide by this. So it is P3, which is, the margin divided by the value of the exposure, total value of the stock, which is 250 multiplied by the Reliance price. So she has to pay 26% margin. If she would have bought the Reliance 250, she would have paid the entire money. Okay, but here she is paying 26%. Is it clear, everyone? How this
Yes.
26% has been calculated, Nikita? Can you just tell me?
So first we multiply the lot size 250 into the uh, price of the stock. This would give us the 100% that would have to pay.
Yeah.
However, for futures and options, we just have to pay the margins. So we calculated the span and expiry margin and totaled that up. So that total divided by the 100% which I would have to pay into 100 would give me 26%.
Okay, very good, wonderful. So she has paid 20%. Now she is exiting. Okay, so she will be getting, in her bank account, she will get the margin back. So she will get the entire 1,52,000, which is this amount. She will be getting back. Okay, and the profit for the long position. So the total money which will come to her account will be 2,20,120, which will include 67,500 rupees of profit. Okay. Now Nikita is out of the scene. On 20th of Feb, okay, what happens is Udit, because Bharat is sitting on a short position, so Udit takes a long position. Okay. Fine. So Udit takes a long position, and so basically Nikita is out. Okay. Now this position, which was between Nikita and Bharat, meant that there was one open position. So if we say that, suppose there was no other person in the market, only Bharat and Nikita were there. So there was only one position, and it is called one open position. Okay. Fine. And today also, even after Nikita exiting, there is only one open position. It is basically a long leg and a short leg. Okay. So here there were two legs. This was a long leg, this is a short leg. So this is called one position. So somebody has bought, somebody has sold. So the entire position is called one position or one open position. Now, Nikita has closed her position, but now Udit has come and taken the place of Nikita. So there is, one long position which has been through Udit and one short position of Bharat. So again, the open position remains only one. Okay, in the entire market, there is no one. Now only Bharat and Udit are there. Okay, and their positions are against each other. Now what happens? So Bharat, Udit takes a long position in the same contract, okay, for 2,600, and he has to pay the margins. I have not written the margin, and whatever the spend margin, he has to pay that. So he has taken a long position on 2,600, okay. Now what happens? On 20th of February, the price goes to 2,610. Who is making money? Is it Udit or is it Bharat? Udit, how much profit you have made for the day?
Sir, 2,500.
And how much loss Bharat has made on that day? Bharat,
2,500.
so what is the net cumulative loss of Bharat for the day up to today?
70,000, sir.
70,000.
He was sitting on a loss, so he made another loss of 2,500, which actually resulted in a loss of 70,000 and 2,500 gain for Udit. Now, because we are, closing to the expiry, okay. So on 23rd of February, dramatic news came for Reliance, which was not good news for Reliance. So the Reliance stock, tanked. It came down to 2,400. On that particular day, what happened? Who is making money? Bharat or
But
Bharat has actually, pulled back a lot of money. He was sitting on a loss of 70,000, so his loss now is 17,500. How much loss Udit had made on that day? Udit?
Sir,
52,500.
52,500, sir.
Okay, so on 23rd of February, on 24th of February, which is basically the expiry day, okay, both the positions remain the same, remain open. They haven't closed it, and the price has gone down further to 2,310. Okay, so who made money on that day?
Bharat.
Bharat has made, profit of 22,500. Now, and overall, Bharat is sitting on a profit now on 5,000. And whereas Udit is sitting on a loss of 72,500. So eventually, Bharat had made a technical analysis and he knew that Reliance is going to go down. Initially, he was making a loss, but on the last particular day, on 2 days, he recovered everything and he was still sitting on a very small profit of 5,000. And Udit was making a huge loss. Okay. Now you haven't closed your positions, so delivery, things will come into play. So let's see. First of all, let's say that what is the total profit or loss? It's a zero sum game. Okay. Because why? Because Nikita has made 67,000 of profit and 5,000 profit by Bharat. So if we add them up and minus the loss of Udit, it will come to zero. Okay. So if I do this, uh, he's sitting on profit and Udit Bharat is also sitting on profit and Udit had made a loss. So if I do this, so there was some calculation mistake. Okay, so that's why it doubled up. So let me just show you the formulas. So formula is like this basically. So this is basically the 5,000 profit and 67,000 profit, and I just minus. So actually it should have been added. So because this is minus, so it got added. Okay. So the zero. So ultimately now you know that the stock exchange has not neither lost nor made money. It is actually the players who made money. Okay, or lost money. So in net, Bharat, what was the net game? Okay, who made profits and who made losses? How much Nikita made profit? How much you made profit? And how much loss Bharat? Udit made? Can you tell me?
So Nikita has profited 67,500, and as well as Bharat made 5,000 profit, and as for Udit, he made losses 72,500.
So is it? It's matches out, isn't it? It actually gives the math that that
Yes,
basically,
sir.
yeah. So it is coming a zero sum game because somebody is losing, somebody is gaining. Okay. Ultimately, the profit and loss is passed on to the players. Okay. It never remains with the stock exchange. Okay. Now what happens is Udit had taken a long position, isn't it? And his position is open. So 250 green. So he will be getting 250 stocks from Bharat. Okay. What is the price? 2,310. Now, this price of 2,310, is it a future price or is it a cash price, a capital segment market price? The price here on the expiry day, which is the price which is taken to settle the trade. Is it the future price or is it the capital segment market price? Nikita?
So capital segment market price.
Now, this price, on the last day, both the prices will coincide as one. So, future price and capital segment price will be the same. It will be only the capital segment price which will prevail. Okay. So, because on that day, the interest will be zero. Okay. Because the trade is over. Okay. So, it was 1 month time was given. So, interest was basically for a month. So, if you calculate the theoretical, the future price is equal to the spot plus the spot plus the cost of carry. So cost of carry has become zero here. Okay. So now Udit, what will happen to the Udit? Can you read what we are going to do? Okay. Udit, can you read here?
Yes, sir.
ये क्या लिखा हुआ open long?
Sir, open long positions result in the receipt of stock and payments of funds and the final settlement price.
So what does it mean? Because you haven't closed the position. Okay. What was your ultimate position? Long or short?
Long, sir.
So since you had bought the shares, you are going to get 250 shares. From whom you are going to get? From Bharat or from Nikita?
Sir, from Nikita.
निकिता तो चल के बाहर चली गई भाई, वो तो अपने घर में बैठी हुई अपने नोट गिन रही है 67,500. शी इज पार्टिंग समवेयर, शी इज एंजॉयिंग
Okay.
हर लाइफ. सो फ्रॉम हु इज गोइंग टू गिव यू द शेयर्स? हुज अदर पोजीशन इज स्टिल ओपन?
Bharat, sir. Bharat is
हाँ,
good.
तो पहले निकिता क्यों बोला था आपने?
Sir, because I thought Nikita sold me those shares, then only I entered
No,
in
no.
the.
Nikita has actually, squared off her position. She took a long position and then a short position. So she has been out of the trade. Okay, nothing will happen to her. She will be just enjoying her profit. How much profit she made? 67,500. Okay.
Yes, sir.
Now you are taken a long position. So you will get 250 stocks of Reliance. Okay, and who is going to give you? Bharat. So,
Bharat, sir.
okay, so open long position result in receipt of the stock and payment of funds. How much money you are going to, pay to Bharat?
5,77,500.
Okay, so you are going to, you should have that money because you haven't closed. So you will be, you have lost money also and you will get Reliance with you. Now you can hold the Reliance and make profits only when the Reliance goes up. Then you can sell. Otherwise, you're today sitting on a loss of 72,500 because Reliance has gone down by 72,500. And how we can calculate? We can just go to the, at what position you have taken a long position. You have taken at 2,600. Okay. Okay, then we multiply this by 250, which is the lot size. Okay, so if we just calculate this, so this will perfectly match with your loss. So 72,500 is a loss. So you bought the shares when the shares were 6,50,000, isn't it?
Yes,
आपके
sir.
जब अपने शेयर खरीदे थे उस टाइम तो कैपिटल सेगमेंट में जो प्राइस था वो 6.5 लाख का था या फ्यूचर में ओके और आज जो कैपिटल सेगमेंट में प्राइस हो गया है वो 5,77,000 यू आर गेटिंग नाउ 250 shares which are worth 5,77,500 you can go and sell them and encash your loss or you have an option to sit with those shares and wait and hope and pray that Reliance goes up and you recover all your losses. And now, Bharat, how much profit you are sitting on? And if you just calculate this, you had taken a long position at basically at the same price, 2030 into 250. Okay. So what is your profit here? Basically, to recalculate, you are sitting on a 5,000 profit. So what you are going to do? Bharat, with this stock, are you going to sell in and cash your profits or you are going to keep? Sorry, in fact, you have actually given the delivery, isn't it? In delivery. So you have given the delivery, okay? So you are going to buy these stocks in the market, okay? Because you haven't have the Reliance stock with you. So what you are going to do, you are going to buy these stocks at 5,77,500 and give it to Udit. And in the process, you will be still making a 5,000 rupees gain. Bharat, आप क्या करोगे? Can you just explain that what I told? What you will be doing now because you have taken a short position. So what you will be doing basically? You have to do what now? आपको क्या करना है? अगर आप नहीं बताओगे तो मैं निकिता से पूछूंगा. Nikita?
Yes, sir.
What Bharat will be doing now because he has to basically he was a short position. Okay, so he'll get this money 5,75,500 rupees. Okay. So,
Yes, sir.
What he would have done basically, I mean, to give this delivery, क्या करना था उसको? उसका तो शेयर है ही नहीं ना, रिलायंस तो है ही नहीं उसके पास. उसने तो सिर्फ पोजीशन ली थी फ्यूचर एंड ऑप्शन मार्केट में.
Yes, sir.
तो उसको खरीदने पड़ेंगे या बेचने पड़ेंगे डिलीवरी देने के लिए? भाई
सर खरीदने पड़ेंगे।
हाँ, उसको
He
खरीदने
will have,
पड़ेंगे एब्सोल्युटली. उसने खरीदे, उसको पैसा मिल गया उदित से, उसने ये शेयर खरीद लिए. ठीक है ना?
yes,
अल्टीमेटली he actually took the position at this price and now he is sitting on 500,000 rupees profit. Okay, he bought the shares and gave it to Udit. Okay, fine, but आपको 5,000 रुपए का प्रॉफिट तो मिल ही गया उसको पहले. Okay, is that okay? Have you got it? Who
sir,
replied?
but
Puru? हाँ.
he would have paid margin before, so that is settled already because he started with the
हाँ
beginning.
हाँ, उसको ये 5,000 रुपए तो उसकी जेब में आ गया ना, उसको मिल चुका है.
Yes, sir.
5,000 rupees, he got it as a mark to market settlement. जो mark to market settlement हो गया था उसकी जेब में 5,000 आ गया. अब उसने क्या करा? उसने मार्केट से जाके शेयर खरीदे 5,77,500 के और इसको दे दिए और इसने इसको कैश दे दिया. तो ये इसमें तो ना कोई प्रॉफिट है कोई नॉट लॉस है. But in the mark to market settlement, he gained 5,000 rupees gain because this money came to him at this time on a mark to market settlement. Is it okay?
Yes.
Have you followed?
Yes, sir.
Okay. Anybody who has not followed, please let me know. Have you all followed? Puru, समझ में आया?
Yes, sir.
Is it clear? केथाराज,
Sir, can you repeat it once again? I couldn't able to grasp it.
क्या चीज क्या समझाऊं? सारा कुछ?
No, sir. About
हाँ, about the
the
last
end of the.
end of this thing. Okay. Now, what happened was Bharat, because your position was open. Okay, fine. You haven't closed it on the expiry. So on, you got 5,000 rupees in your account, okay, because of the mark-to-market settlement which has happened. So you are sitting with 5,000 rupees in your bank account, but you haven't closed your position. You were gaining 5,000, okay, but you haven't closed your position. What now you have to do is, because you have taken a long position, okay, or rather short position. So you have to, you know, you will be basically, taking, you have to give delivery. You have to give, you have to basically buy since you have taken a short position. So you have sold Reliance, okay, isn't it? आपने क्या position लिया? You have sold it. Were you having Reliance with you?
No, sir.
But you have sold it. Okay, so you have to buy it now because you have to give. You have sold it to whom? You have sold it to Udit, isn't it? You told Udit that I'm going to sell you Reliance. Okay, fine, but it was not without any stocks in your hand. So now you have to buy the stock in the market at whatever price it is prevailing, and it is prevailing price is 2,310, which means you will be buying these shares by paying 5,77,500 in the capital segment, and you will be selling these shares to Udit, who will be paying this amount. So ultimately, net, whatever you paid to acquire these shares in the open market, capital segment market, you got the money from Udit. Okay, fine. Have you got it now? Dekho, Udit, you have sold Reliance. Were you having Reliance? No. But now, since you have not closed your position, the result is that if you have sold, that means you have to now buy and sell it, because without buying you can't sell it. So you will be buying in the capital segment market by paying 5,77,500 rupees, okay, and you will be giving the delivery to Udit, and Udit will give you 5,77,500 back to you. So in this last day deal, are you making profit or gain or loss here out of this settlement?
Sir, at the end, I am making profit, 5,000.
At the end, you are making profit, but because that profit you have already made it. But in the last leg, when you haven't, closed your position, so in barring your 5,000 rupees, now are you making any gain or loss because of this transaction which is happening, which you are forced to now buy Reliance and then sell the Reliance to it? Are you making any gain here? भाई उदित, आपको तो शेयर खरीदने पड़ेंगे ना, आपने तो बेच दिए थे उसको, क्या कहते हैं, उदित को. यू हैव सोल्ड रिलायंस, you have taken basically a short position. What position you have taken with Nikita initially, short or long?
Short, sir.
So you have sold. Were you having Reliance with you?
No,
That
sir.
day no. So you now you, since you have not, you just slept over the matter, you never closed your position. So since you have sold to somebody, suppose you sold mangoes to me, you have to give me mangoes ना. आपने मुझे दिए नहीं है तो आपको देने पड़ेंगे ना. तो आपकी पोजीशन बिटवीन यू एंड उदित है, तो आपको जो ये शेयर्स हैं इनको देने पड़ेंगे, ये आपको पैसे देंगे, लेकिन आपको भी तो मार्केट से खरीदने पड़ेंगे ना. यू हैव टू बाय द रिलायंस इन द ओपन मार्केट, इन द स्पॉट मार्केट. So you bought at 577, you sold it to Udit at 577. You didn't make any money. You made only your 5,000 profit, which you have made on the because of the mark-to-market settlement, because your price was, since you have taken a short position and Reliance has gone down. Okay, so you are sitting in a profit of 5,000. So you are making a profit of 5,000 net. But here, the result is that you have to buy the stocks in the capital segment market and give it to Udit. Have you understood now, Bharat, or not?
Yes, sir.
100%?
Not 100%.
Acha, tell me why you have to buy Reliance to give it to Udit.
I don't have any stocks of Reliance, sir.
हाँ, बस. तो last transaction ये है. The last transaction is that since you have already sold your stocks to Udit in the future on option market, it was just a contract. Okay, that means you should not have Reliance with you, or doesn't make any difference. You can still sell Reliance without even having them. So you sold them, and you are making, you were sitting on a huge loss when Nikita was there, but suddenly the Reliance came down and you came back into profits. Okay, so you made 5,000 profit. You are happy. You should have closed your position just before the expiry, and it would have not given you a trouble of now giving delivery to Udit. Now, since you left the position open, on the last day you are forced to buy Reliance and pay 5,77,500 first and get the same money back from Udit, because he was also sleeping, he didn't close the position, so he will be getting 5,70,000. So instead of getting the profits, he's getting shares which are worth now 5,77,500, but he has taken a bet at the time when Reliance was 6,50,000. So he's sitting on a loss of 72,500. If he sells Reliance, he is going to encash that loss, isn't it? In fact, he has already paid that loss by a matter of fact through the exchange. Okay, so when he bought the shares, it was 6,50,000. Now it is 5,77,000. So he has already suffered a loss. Okay, through the mark-to-market settlement, because he has already paid 72,500 because his bank has been debited with that amount. Okay, so now he is having shares worth 5,77,500. If he goes and sells in the market, he is going to get 5,77,000. Okay, which basically is so he is going to get a delivery. Okay, fine, fine.
So what happens if one of the member got closed?
No, if it is not like this. So every trade, there will be either an open position between having both the legs. It can't be that there is only one leg which is remaining, other leg is still, because there has to be a trade between the two parties. Okay, open positions will make one long leg and one short leg. Okay, fine. So it will never be the position where only one person will be left. Okay, only a short leg or left long leg will be open. It will never happen like this in the market. Okay, fine. So otherwise the trade will not happen, because if somebody wants, suppose there are only two people, okay, for example here, okay, assume that Bharat, Nikita and Bharat were in the trade, okay, fine. Bharat and Nikita were in the trade. So if there was no one else, so this trade will actually, will get over. If Nikita is exiting, then Bharat has to also exit on the same day. Then only the trade will get closed. Okay, fine. If suppose there was no other participant in the market and Nikita wanted to book her profit, okay, on this day, so Nikita would have gone to the market and sold, a short position in the trade. So if Bharat was not interested, Nikita would not be able to square off his position at all. Okay, because in that case, Bharat will say, "Why should I sell?" Okay, because I will be making a loss of 67,500 on that day. So Bharat will say, "Still we have time, so we'll wait till expiry." So what will happen on suppose if you imagine theoretically on this Thursday, when the stock was 2,310, Nikita wanted to close her position, but she was unable because there was no other deal happening on say 19th. So will Nikita be making a gain or loss on that day? Who will be sitting on profits, Nikita or Bharat?
Bharat.
Bharat would have been making a 5,000 profit and Nikita would be making a 5,000 rupees loss, isn't it? Here they go, 2310 and 2330. So Nikita has lost 20 bucks on 250, 5,000. Okay, and Bharat has actually taken a short position. Okay, so the share price is down by 20 bucks, so he is gaining 20 rupees, isn't it? So 20 into 250, which means 5,000 rupees gain. Is that okay?
Yes, sir.
Okay. So now any questions here? Have you followed? I mean, Bharat, have you understood now a little bit more compared to
Yes, sir.
what you were saying? Okay. So now we will have a break, isn't it? Fine. So we will have a break for about 10 minutes or 12 minutes. Okay.
Sir,
Fine.
what
Is that?
happens
Uh,
if there is no party found till the expiry date?
Now come again with the question. Now, if there is no party found, I told you, what will happen will be that as we close to the expiry, the both the parties will get demands from the brokers to pay margin money, which will be equivalent to the cash price of the stock. Okay, fine. So the margin amounts will keep growing. Okay, and the margins will be such collected that on any particular day the trades can be settled independent of parties backing out, because you have already given a span margin and the exposure margin on the first day, and this expand margins will keep rising as we become, we are very close to the trade. So that any day, it may happen that the other party backs out, but even if he or she backs out, the exchange will have enough money to take care the trade is settled between the two parties. Okay, is that okay? Because there is an exchange risk mechanism which is governed by the stock exchange through the help of the brokers. So they keep collecting money from the respective parties either through mark-to-market settlement or through basically the exposure margin, so that on any given day, even if say suppose the person dies who has taken the position, okay, he's no more in the world. I mean, that can also happen. But even if it happens, the trade will be closed on that day. Okay, the margin call will come to the person, and they find the person is not responding, so the trade will be forcibly closed on that day. Okay, fine, between the two parties. Is that okay?
Yes, sir.
So the stock exchange will make sure that there is no counterparty risk involved to anyone through the risk management strategies they follow. Okay, so that is the answer for that. So now we have a break. So it's 12:10. So we meet back by 12:30 again. Is that okay?
Okay, sir.
Okay, and you can just ask more questions at that time. Okay, are you all back? Can you hear me now? Okay. Now, are you able to see this Excel sheet again? Tell me. Can you see the Excel sheet? Now, the only thing last thing which is left is basically that Bharat has to buy the shares from the open market, okay, and give it to Udit. So once he buys the stock from the open market, okay, he has to pay brokerage. Okay, suppose assuming it is, you know, 0.5%, okay, point, sorry, 0.5%. 0.05 percentage, okay. So this is coming out to be very less. Say, let's say 1% to make the thing easy. Fine. And I divide this by 2 to make it 0.5%. So, which means that Udit has to pay 2,887 rupees as brokerage, okay, for buying these shares first from the market, okay. So what will happen is that his profit, which he was making a 5,000 rupees profit, will basically, come down to only, after the brokerage, it will come down to 2,113. Now, since Udit has to, give delivery to, Bharat has to give delivery to Udit, so Bharat has to buy these stocks from the capital segment of the market, and once he buys it in the market, he pays say 0.5% as a brokerage. So he will be spending, 2,000. Sorry, he will be spending how much? He will be spending 2,800 as brokerage, okay, and his net gain will be only this much. Have you got it now? Udit, have you followed what I'm saying? Nikita or Udit or everybody, Puru, समझ में आ गया? Because there is now, because to give this delivery business, and Udit has to have a demat account, as well as Bharat has to have a demat account. Agar in case if Bharat and Udit never had a demat account, they have to open a demat account. Okay. So they should have a demat account, number one, and the exchange will ask you to open demat accounts, okay, immediately entering into the trade, because there can be a possibility that there will be delivery things may happen. Like in this case, it happened. So that means there will be some demat charges and the brokerage charges which have to be paid, and then Udit will be sitting with stocks of Reliance 250. So when he sells, so he has to pay also the brokerage. Okay, fine. So apart from making a loss of 72,500, he would, if he sells immediately, his loss will also go up to the extent of 2,887. Is it clear, Udit? So what is clear now? So you should have two things. What are those two things? A demat account and